screen. I think. There we go. Entire screen, yes. It's always annoying that on YouTube. What's that? Hold on. The check space. Choose who can participate. Okay, done. So here, if you go to the Trading Guys story, you'll see the link for this live trading session on YouTube. I'm good, mate. How are you? I'm just going to look through the markets and see what we've got. Okay, that's fine. Let me know what you guys can see there. Like if you're on YouTube, what can you actually see when you're on YouTube? Hopefully you can see me and the screen. Yeah, that's fine. It's just, wait there. Is that on? Okay, it's hello. Why is that not there? Okay. Hello. It should be working. Right, let's see what we've got here. News-wise, crude oil is expected to average $77 per barrel, 2024. Brent crude oil is expected to average $81 a barrel. Let me just have a look at Brent crude oil right now and see where it's at. Okay, Brent crude, there it is. Okay, it's at 71, and US oil is at 67. Yeah, it's definitely, oil is definitely okay, mate, thank you. Oil is definitely a buy. It's just not a buy just yet. Just not yet. Where are we? I was on it a second ago. There we go. Brent is the same. So expected what? Expected to make $77 a barrel, and Brent crude oil's expected $81 a barrel. 81 is where? So 77. Okay. 77. Yep. Okay, that makes sense. And Brent is 81. Yeah, that also makes perfect sense. Yeah, right there. So if you're trading oil, we just need to wait. So when you look at it now, you think, I mean, if you looked at it earlier, you think, oh God, there's a double bottom. It's not quite there yet. If you look on the, so if you're on, and I'm going to maximize this, right? If you want to watch this live, if you go to the Trading Guys story, you'll see a link to our YouTube channel. I'm literally doing this live on YouTube right now, so you can actually watch it. All right. And you'll be able to see, I'm going to talk through why you would take this or why you wouldn't take this and so on. If you look at oil on the 4 hour and on the daily time frames, it looks like you could buy it now. It looks like, oh, that's a good buy. But it's not. If you look on the weekly time frame, I'll show you. Hold on. Look at this, right? Here it is on the daily, right? You think it's going to push up. If you look on the 4 hour, there we go, look. Looks like it's going to push up, boom, and then go, right? However, if you look on the weekly, give me 1 second. There we go, look. There's no way you would buy that right now, right? I'll just zoom out. Especially here. It's exactly the same. Look, there's no way you would buy that right now. Engulfing, that's going to melt down. So what I've been saying to the guys in the group is, it's probably going to retest this bottom area. Most people who are in buys right now will have their stop losses where this yellow sign is. So even although market makers and big institutions, they can't see your stop loss, right? People always say, oh, they know where it is. Well, and others say they don't know where it is. It doesn't matter if they know where your stop loss is or not, because the point is, they know where most people, most retail traders will put their stop loss, right? And that's going to be below the previous lows. Here's the previous lows. Most people are going to put their stop loss, anywhere between this area here, and this area here, right? Anywhere in between here. So what does that mean in terms of trading? That means there's a huge amount of liquidity down here, a huge amount of liquidity. And what does the market normally do? It will normally give you a liquidity grab, boom, then it will fly back up, enter, and then it will go. So it's Dr. David Paul, the ex-Royal Marine Commando officer, who's a very famous trader. He always says, before you place a trade, stop for a minute and think to yourself, where would I put my stop loss, right? Now, when you do that in this trade, you're going to put your stop loss, I'll just show you. You would say to yourself, like any retail trader, I'm going to put my stop loss below the previous lows, right? If you're going to be extra careful, you could put it behind here, but still, you're still in this zone, right? This is the zone where you're going to put your stop loss. And that's where all retail traders are putting their stop loss, right? They're all putting it there. So guys like Dr. David Paul would always say, think about where you're going to put your stop loss. And instead of putting your stop loss there, make that your entry point. So don't place the trade where you're just about to place the trade. Stop. Don't place it. Think about where you're going to put your stop loss and make that your entry and your stop loss even further behind. And it does work a lot of the time. It does work more often than not, guys. If you want me to go through this in depth, you can go to the story, click on the story in the Trading Guys. You will see a link to our YouTube, and you'll be able to watch this live stream. You'll be able to see my whole screen, and we can talk through it. You can ask me questions if you wish. Why is that so bad? There we go. Okay. Just now, oil is it's in a fantastic place to buy from. Fantastic place to buy. However, it's just not quite there yet. It's not quite ready. Right now, we have all the drama in the Middle East, like Israel, Palestine, Lebanon, blah, 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 right? Obviously, that's not good as a human being. But what it means for trading oil is that when there's conflict, especially conflict in the Middle East, oil prices fly up. Now, they won't fly up yet because they're being manipulated to push down, grab that liquidity, stop people out, and then it will push the orders after that. So you have to wait the process, right? It will be a buy, 100% will be a buy, but it's just not the time to buy yet. If you're into trading, look, you can. I'm going to turn the camera around and I'll show you. 2 seconds. So we have a full Discord channel. We give you 1 month completely free, absolutely free for an entire month. Here's guys' results today. This is guys copying our trades today. So this is my business partner gives these trades. He is a scalp trader. Again, anybody else? He's a scalp trader. I am a swing trader, right? You can go look in here for trade results. You can see a whole list of trade results from the guys. There we go. This is 1 day, by the way. We charge £97 a month, and this is just 1 day copying our trades. There we go. So we have everything. We have educational stuff up here. All my trading is done live. We do trading chat. But like I said, we give you 1 month completely free, and that's so you can see if we're bullshitters or not, right? Because I know that there are a lot of fucking idiots out there that will just try and sell you a dream, right? And get rich quick and all that nonsense. So just to show that we don't do it and put our money where our mouth is, we give everybody a completely free month, not even a free day or a free week, full free month. Because the thing is, we did initially start off saying, oh, we'll give you a free week, thinking that was enough. And the thing is, you might just have a good week, right? Like, it's very easy for bullshit traders to come on and just luckily have a good week, and then you're trapped with a subscription and blah, 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 right? But at least we do a full month. You have losses and wins in there. Lee, my business partner, he gives scalp trades. So he usually gets 2 trades per day, scalping all the time. But for me, because I'm a swing trader, sometimes, I can take 5 trades, 10 trades in a week. But then there's other times where I don't take a single trade for 3 or 4 weeks. That's just the way it pans out, you know. So if you're someone that's like, you need to be making money every day, well, you're never going to do that in trading anyway. It's just not how it works, guys. But yeah, let me open this out. Like I said, this is live right now on YouTube. So if you jump across their YouTube channel, The Trading Guys, you'll be able to watch this and you can see my full screen. I can share with you. Hold on, wait to turn this round. So we'll cover fundamentals, and if you wish, I will also talk you through the stuff that I use for gathering data. So right now, look, people will be. Let me jump across. There's GJ. Hold on. Here we go. So, like for example, people will potentially be selling GJ, right? Oh, it's fucking sells. Is that one? That's the daily. Hold on. Right, but we're seeing this and thinking, oh, it sells. It's GG's buys all the way, guys. I'm not saying you would buy it right now. You know, it could come down to here. It could push down, but you don't want to be taking sales, right? Because economically, the pound is far stronger than the Japanese economy, right? The British economy is far stronger than the Japanese economy. And then also when we come across here, this is, what do you call it? This is the data. Retail traders, who are fucking idiots, are 50-50 buys and sells. And as you can see here, 76.9% of all traders lose money with this provider. So you would never follow retail traders because they're fucking idiots. COT, this is the banks. It means commitment of traders. The banks are all in buys. Now, I know you can see, you know, there's some sells here. It's because banks do hedging. So, for example, when you and I trade, let's say we're trading this 100 grand account, a 250 grand account, whatever it is, we would trade, you know, for me, I trade 0.25% per trade up to, you know, 1% per trade, right? So I have, let's say I trade 1% per trade, I have 99% of my money, you know, safe, if you like, right? Banks don't do that. Banks and big institutions, they have all their money on the line. They have all their money on the line. So they don't just sit with $1 billion account and say, okay, I'm going to trade 50 million of this. They trade the entire billion. But what they do is they hedge. So they will put, let's say they're going to look at buys, they will put the majority into buys, you know, if that's what they believe in GJ. And then they will put, let's say they put 80% into buys, 20% into sales, or 70% into buys, 30% into sales. But the point is, all of their money, their entire pot is in the trade, right? That's how they do it. They're obviously different from us, right? But yeah, so when you look on here, I'll just turn it around again. I'll answer your question in a minute, mate. I can see it there. Dan, 2 seconds. Yeah, so you want to be copying the COT commitment of traders. You want to be copying them because that you're like, oh fuck, that's buys, and look, they've increased. You know, they've increased their amount of orders and blah blah blah. Obviously, that's a good sign, but it doesn't mean that you buy right away, right? You still have to, sometimes when it says buy, it can still push down to here, and then you jump in for the buy, right? You still need to wait. You can't just jump in. Let me have a look. Yen strength. New PM, nothing to do with the PM, mate. The yen's fucked. The Japanese economy is dog shit. I'll show you right now. If you live in Japan, you're as well trading in chocolate buttons because the currency is absolutely shit. A new PM isn't going to do fuck all about that. Look, it's wank. They're totally wank, mate. But what can happen, excuse me, what can happen with the Japanese yen is that even if the yen is weak, like it is, it's been dog shit for fucking years, right? So even if it is weak like now, if you start to see pound, everything in the pound, the British economy dropping, everything in the American economy dropping, everything in the Euro economy dropping, and it's starting to melt, and we hit these recessions and market crashes and all this fucking gloom and doom, right? What will happen is, or you may see happen, sorry, I should say, because nothing is guaranteed. What you may see happen is that people will take their money out of the US and pound and euro, and they will then put it into safe haven economies / safe haven currencies. A safe haven currency, Swiss franc, Japanese yen, they'll put it into things like gold, so that if the economy shit, that can happen, where you would see USD Japanese yen melt and you think, oh God, the Japanese economy is strong, but it's not. It's absolutely dog shit. You think, well, why is that? It's because the sentiment has changed from being risk on, where they would lump it into pound, USD, and euro, becomes risk off, and they would then take the money out of there and put it into safe haven countries, which is like Japanese yen, Swiss franc, New Zealand dollar, and things like gold. I'm thinking about getting PMT, but I have no idea how to incorporate them into trading. Yeah, PMT is amazing, mate. So, like, there's what scares people, right, is that, and same with myself, when I first got PMT, I was looking at it like, what the fuck is that, right? Because there's 100 things. Look, I'll show you my screen. Hold on. There's 100 things, right? And when you just look at all this, your brain just starts fucking frying, right? That's what happens. Your brain just starts melting. You don't look at all this, right? You don't need to use all this. The company that made this, Prime Market Terminal, they made it because there's 1,000 different ways to trade, right? Not everyone trades the same way. People use different indicators. People look for different things in the market, which is absolutely fine. I'm not saying my way is better than yours or your way is better than mine. Everybody has their own way to trade. So you don't need to use all of this. The only one that I use, right? The only ones that I use, I have a quick look at the overview. When it comes to currency strengths and all that, I just fucking bin that off. I don't give a shit. I don't use bank reports. I know my mate who created this, he loves reading bank reports. Personally, I just found, see, when you read the bank reports, it's just fucking people's opinion. And more often than not, the bank reports were bullshit. Like, you would read it and be like, okay, we're going to buy this now. You'd enter a buy and it would absolutely melt, So it was like, are these fuckers trying to create liquidity, So personally, I think the bank reports are bullshit. I don't like it. But my mate who created this, he seems to love bank reports. Again, each to their own. So what I look at, events, I don't care. Volatility, I don't care. Market structure, I have a little look at it, but I don't really, it's not something I really depend upon. See, I don't really give a shit about that, because I basically do this myself, right? And I will cover this in one moment to show you my technical analysis side about when I enter and so on. Trend, I don't bother with. Seasonality, I do bother with. Seasons is very important. If you are going to enter a sell on GJ, for example, and then you look and we're like, right, we're coming in October, and it says October is a massive fucking buy, this takes data from like the last 15 to 25 years, and it tells you seasonally, every year's been a fucking buy in October. So that you then have to think to yourself, oh, if it's always a buy in October, then why am I looking at sells? You just wouldn't do it. It gives you a kind of pattern prediction here as well, going up. You can see it here, look down and then breaks up. What else have we got? Let's see. So I use seasonality. I don't bother with pattern. I don't bother with range. I don't bother with volume because I do all that myself. I look at DXM and COT, and I will explain what both of these are. So DXM means Dumb Money Index. I don't know why it's not called DMX instead of DXM, right? So Dumb Money Index, that basically means retail traders, right? Guys sitting at home with $100 account, try to turn it into fucking 700 million next month, right? And they don't have a clue what they're doing. That's what it means, dumb money. Dumb money is, they call us, I mean, I'm a retail trader, right? I'm not fucking Jordan Belfort, but that's what they call us, right? They call us dumb money because most retailers are retarded. So basically, you always want to be doing the opposite, the 100% opposite from these guys. Right now, these guys are 50-50, right? So that's okay. That's perfectly fine. And the thing is, even if dumb money lines up with COT, which I'll explain what that is in one moment, that's still fine. The point is, you want to be following COT, right? So COT is basically the banks, the big institutions, the hedge funds, your JP Morgan, your Morgan Stanley, blah, 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 right? Excuse me. And what happens is, every single Wednesday, by law, all the big institutions and major corporations, they must submit what trades they have entered that week. Thursday, they all get through the process of being verified. It's to try and stop insider trading, right? Obviously, that still happens, but that's the point, and it's to try and stop that. On a Thursday, they get submitted on a Wednesday, verified on a Thursday, and then on a Friday, that information gets released to the public Obviously, you and I don't really know how to go and search for all that stuff, and it'd be a huge fucking drama, right? So fortunately, we have platforms like this, PMT, Prime Market Terminal, and there are many other platforms that do it. I think there's about 5 or 6 that do it, and it gives you the data, so it's very easy to see, right? So basically, if you come on here and you can see that's green and that's red, right away, you know that predominantly, 80-20 or 70-30, whatever, banks are in buys on GJ. So then if you're in GJ and you're like, oh, fuck it, look at that, I'm going to sell that, right? And you're looking at sales and you quickly jump across here and you're like, oh, shit, wait, why would I sell it? All the banks are in buys, right? Now, you have to ask yourself this question. Think about it this way, right? If every single retail trader like you and I, if our accounts were so big, right, that our stop loss was a $200,000 stop loss, right? If every retail trader on the planet had a $200,000 stop loss, which means their account's fucking huge, and we all traded at the same time on the same pair in the same direction, we still do not have enough money to move the fucking markets. That's how insane this is, right? That's how fucking insane it is. So you imagine when you're trading your fucking $25 stop loss, you aren't going to do anything in the markets, right? Even if your stop loss is $3,000, you're not going to move the markets. So who has the money and the volume to move the markets? It's the banks. It's the big institutions, because they put in fucking billions at a time, right? And you have to remember, to move 1 pip in the market is 100 million US dollars. So if you measure a candle and that candle is 17 pips, that means $1.7 billion has been traded, has exchanged hands within that one candle. So the amount of money is fucking, you can't even imagine it, guys. So the point is, when you come across here, if you were thinking to sell GJ, they're actually like, oh, there's a large engulfing candle going to the downside, it's going to come up, retest, and then it's going to melt, then it may do that, right? It may melt down because they're trying to build up liquidity before they then fucking launch it, right? But it would tell you, it's a warning sign like, whoa, actually, I better not sell that. Why? Because if I sell it, I'm going to be going against the people who have enough volume to move the market, and they're all going fucking long. So why would I go short if the people who actually move the market are going long? You see what I'm saying? So this information is fucking unbelievable. It's an amazing piece of kit. I do understand. I'll show you again, right? I know when you look at it, it fucking fries your brain. I understand that. I used to be the same. But you don't have to use all of it, right? All you need to care about, well, all that I care about is overview, quick look. Seasonality is very important because it is very good. Pattern and blah, 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 I don't give a shit about. DXM and COT. So out of all this bollocks that I can use, I use 4 things. That is it. So the way that I go about trading, I'm a fundamental data-driven swing trader, right? I use very low risk. So I have a managed account. I have a PAM account. I'll show you. So here we go. This is my managed account that I trade. There's loads of people with money on this, and I trade it. I've got my own money as well. So what happens is, right, it's not that I'm not an asset manager or anything like that. I did used to trade for companies for years. That's why I'm in Asia. But now I trade PAM accounts, right? So what that means is I have my own personal account that I trade, and then anyone who wants to attach their account to mine, if they can't trade, they're like, look, I want to make money trading. What happens is they open a live account. They then tell the company, I would like my account attached to Ryan's account, and then that's it. So anytime that I place a trade for my own personal money, it places the exact same trade for them. Their account copies my trade. So it's not like an asset manager where I'm physically trading other people's money. The way that the system is set up in a PAM account, a MAM account, a copy trader, is that I'm just simply trading my own money, and other people who are attached to it, their system copies my trades, right? That's how it works. And I get paid a commission, obviously, from the profit every month. So what I do is, right, I look at fundamentals first. I'll turn this around and I'll show you, because there is one that everyone knows about. So the one that everyone knows about is things like Forex Factory, right? However, Forex Factory is pretty shit. I'll tell you why it's pretty shit. Hold on, wait, I'll just think of this. You don't get a lot of you don't get a lot of information on here, right? And number 2, when it's time to drop, for example, let's just say 750, let's say what will I look at? Hold on, let me find one. Retail sales month on month, right? Just example. Or in fact, there's a better one. CPI flash estimate year on year, red folder, right? And that's going to drop at 4 p.m. Okay. Now, the thing with Forex Factory, right, why it's so shit is you don't get a lot of information on it. It looks like a lot, but if you go on to Trading Economics, which I'm going to show you in a moment, you get far more information. It was my good mate Dan that actually shared that with me, so thank you, Dan. That was a real golden nugget. Thank you, mate. So when you're here and it turns 4 p.m., this number will take about anywhere between 3 to 5 to sometimes even 10 minutes for the number to show, right? However, when you're on this platform here, it's called Trading Economics. When the time drops, this will instantly change. At the click of a finger, the number will instantly be there. So if you're someone who actually trades, what's that? If you're someone who actually trades news events, which I don't, but if you are someone who trades NFP, blah, 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 you will get the numbers much faster on here. And when you come, you actually see the number here, right? And when you click back on Forex Factory, it hasn't even shown up yet. And when you get the number here, usually when you look at the market hasn't even moved. But when the numbers finally come out on Forex Factory, the market's already flown, you know. So what I do is I do fundamentals to see which economies are strong, which economies are weak. And I post them every single week. Hold on, I'll show you. I'll show you this. Let me just go to the channel. Sorry, give me 2 seconds. Here we go. Look, the trading guys, and every single week I post live fundamental market reviews. Every single I usually post them every single Saturday, right? That's how I do them. Anyway, jumping back. And then after once I do the fundamentals, I find out which economies, which countries are strong, right? So pound is strong, Japanese yen is weak, you know, pound is strong, Canadian dollar is weak. So I know that I'm buying these pairs, right? And so on and so forth. Then after that, once I've got the fundamental stuff, I then come on and I check the data. So I look here for all the different pairs and I see which is going to be a sell, which is going to be a buy, and I just cross-check it, right? And I see, look, USD CAD, just for an example. Fundamentally, it should be a buy, but let's see. They could be pulling back just now. Well, there you go. Look, it's a little bit 50-50. You see, it's probably 55-45 kind of thing. So it's not too solid. However, you can see all the major institutions have increased, right? They've increased their position sizes from 24,000 to 27,000. So they're buying this, right? You can see they're buying it. Let's see what dumb money index is doing. Let's see what the retailers are doing. You always want to be doing the opposite of them. So they're actually buying it as well, which is fine. That can happen, all right? So they're actually, for once in their fucking life, they're actually in line with the market, right? And then let's have a look back here at USD CAD, see what it is. So this could be, you get 2 things. It's either going to come here, retest and reject and melt, or what you will find is, so I haven't updated this because I never trade this pair, it will break through, come back, retest, reject, and then go. So for me, that's my entry right here. Not here. I don't care about entering here. I care about the retest, reject, and then go. That'd be your entry for buys. All right. But there are much better ways to do it. Let's have a look at what we've got here. Yeah, I don't like that for now. Let's see what we've got. Almost, if this comes down and retests this area, see, most people will jump in now. I don't jump in until it really touches this area here. Comes in for the deeper retest. I know, mate. DXM's crazy. They're always wrong. That's why. They're always fucking wrong. EDCHF, nothing there. What's that? AUD Japanese yen. See, it looks like a sell from here, right? But fundamentally, you wouldn't sell it. So let's now come across. Let's have a look at AUD Japanese yen. So before you would enter, it looks like a sell, right? I mean, if you looked at that and you're like, oh, I would sell that now, it's not that you'd be wrong because it looks like it, you know. But fundamentally, even though the Aussie dollar is getting is getting weaker just now, it's still far stronger than the Japanese economy, right? So you need context. You can't just say thingy. So dumb money index, retailers are in sells. Let's see what the banks are in. Come on. The banks are 50-50, so it's not very clear cut, but you can see they have added to their buy positions, right? You see that from 169 to 176, they've added to their buy positions. So what does that tell you? It tells you that banks are fucking buying it, right? However, they are kind of 50-50. So normally, if I have a look on Prime Market Terminal and they are 50-50, and it's a bit humming and hawing, I'm more cautious to trade it. And do you know why I'd be even more cautious now? And probably why it's 50-50 is because fundamentally, last week and this week, the Aussie dollar has been taking a bit of the Aussie economy, I should say, has been taking a bit of a pounding, right? Now, not only has the Aussie dollar been taking a pounding on its own, what you have to remember is correlations between economies / currencies, right? So the Aussie dollar is very heavily correlated to China, the Chinese yuan renminbi, right? Positively correlated. That doesn't mean it's good. That just means they move with each other. So if all business, everything's going good in China, the Aussie dollar will get strength from that. If business is fucking terrible in China, like it is now, and it starts going down, the Aussie dollar will plummet with the Chinese yuan renminbi. And it's because they just do so much trade with each other. So the more production stuff China has to do, the more coal it buys from Oz, the more fucking, nickel, tin, steel, all that shit, the more that it buys from Oz, to fucking to trade with. However, when China's economy is shit, like it is right now, their manufacturing is absolutely fucking wank, then they don't buy. So it has a major, major impact on the Aussie dollar, right? Now, on top of that, the US dollar is heavily negatively correlated with the Aussie dollar, right? I'm trying not to confuse you here. So I'm trying to say it slowly because it does get quite tongue twisting at times, right? So if the US dollar is strong, it will make the Aussie dollar weak. So negative correlation means they move in polar opposites from each other. Positive correlation means they move together. Like Bitcoin and Ethereum, if Bitcoin goes up, Ethereum goes up. If Bitcoin comes down, Ethereum comes down, right? They're positively correlated. So yeah, if China goes up, Aussie goes up. If China goes down, Aussie goes down. If USD goes up, Aussie goes down. If USD comes down, Aussie goes up because they're negatively correlated. They run negative. They run opposite to each other, right? So it's very important to understand that as well. Because you can never just say one thing in trading, right? Oh my god, that's doing amazing. Let's fucking buy this, right? You need the whole fucking context of what's going on, right? Aussie's doing well right now, but let's have a look at China. Is China doing well? Nah, China's doing fucking terrible. Okay. It's like, do I really want to be entering that trade? Remember, as a trader, you can decide if you're going to take a trade or not. Just because something's lined up, but you're like, fundamentals don't really line up. The banks are 50-50. It's like, do I really want to take that trade? It doesn't mean you can't take it, but you're thinking, you don't want to be a fucking machine gunner, right? Let's use the army, right? I know people keep saying always be a sniper, but you should always be a sniper in the markets. Let's say you've got 5 fucking bullets, right, for 5 trades. There's 100 enemy fighters in front of you, right? And you're fucking lying in the grass. And you've got 5 high value targets, right? As a sniper that you've been told, right, take out these fucking commanders, these insurgent leaders, right? You're not going to fire off those 5 shots into the crowd of 100 and just hope to fucking God that you kill the 5 that you're meant to fucking kill, right? Well, it's the same in trading. You don't just take every fucking trade. Just sit there with your round, and every shot that you take, you want it to be on the fucking target, right? Doesn't mean you're going to win every trade, of course you're not, but you want to maximize your probabilities. You want to go for the low hanging fruit. I've just waited 3 weeks and I still haven't placed a trade yet. I've been sitting here every fucking day like this. Come on, I don't sit all day because I'm a swing trader, right? So I can come on. I know my areas that I'm interested in, and if the market comes there, I can say, right now I'm interested to look, right? But because I do swing trades and it can take so long, I know that when I come here and I can see, fuck, that's miles away, I instantly know, right, that's going to be about 2 weeks before my trade lines up, so I don't have to waste my life sitting in front of the fucking computer. I can see right away if the trade's going to pan out in 2 weeks, or if it's going to pan out, if it's going to pan out in the next couple of days, and so on and so forth. So I just wait, right? But many people can't fucking wait. Even people that are very good traders, why they lose money, they're like, oh man, I seem to be good at trading. My technical analysis is great. This is great. That's great. My execution's great. But I keep fucking breaking even. Yeah, well, look at your trades. I will guarantee you there will be, fucking 70% of trades that you've taken in your history that you shouldn't have fucking taken. You just took it because it stems from when we're a kid. We're always told that the harder you work, the more money you make, right? And that's kind of really embedded in our subconscious. And it's the total fucking opposite in trading. It's not the harder you work, it's you get paid to wait. That's why they call it patience, P-A-Y, shints, right? Patience. You get paid to fucking wait in trading. And most people can't because they just think, oh, I need to be in the market to be making money. No, you don't. You have to pick the better trades to be making money. Yeah, how do you overcome that no trading feeling? I'll share with you right now how I overcome that, mate. Let me show you. So I set up areas, right? Let me try and find a clean one because some of these are pretty dirty because the markets are pretty shit right now. So I will show you exactly how I overcome that. What's this? Euro NZD. When I'll turn my camera around. Right, see this here? This is a range. I don't trade ranges, although it's very easy to trade ranges. Very fucking simple. When it hits the support, you're buying it. When it hits the resistance, you're selling it, right? Very fucking simple. So what I would do is whatever the market does outside of this area and outside of this area, I do not give a shit. I don't try and catch it here and chase it up. I don't try and catch it here and chase it down. I don't try and catch it here and chase it up. Not at all. I wait for the market to hit this zone and then I care. Or I wait for it to hit this zone and then I care. Anything it does outside of that, I do not give a shit. I'll show you other pairs. Same again, look. So I'll show you, hold on. I just mark it up. Where you see the small candle with the large engulfing, like this is probably a better one. Excuse my fingers. This is probably a better example right here. Small, the large engulfing, mark up the small, drag it across, and you're just waiting for it to come back, retest, reject, and go, which has already happened here, right? It happens in every fucking pair, I'm telling you. Where are we? Let's have a look. Same again, look. Small white, large engulfing blue, comes up, retests that area, and you could then take sales if fundamentally you're looking for sales, right? So here, it could be, here's the previous resistance. Once the resistance gets broken, this then becomes the new support, right? And because we're looking for buys, you could easily buy that from here and ride it up. Yeah, I don't like it as yet, so I haven't taken it. Here again, you see the small blue, large white engulfing, mark up, drag it across, retest, reject, and away it goes. So how I avoid over trading is I do not touch anything in the market until it hits my areas. I don't touch fucking anything. Exactly, mate. No man's land. Exactly. You can trade ranges. Like, there's nothing wrong with trading ranges. I just personally don't. I just trade trends. Look, small. Sorry, wait, I'll zoom in. Hold on. I'm trying to do everything with fucking two hands here. If you're opposing candle, small blue, larger engulfing white, you mark up the small blue, drag it across. So see when this is happening, right? Wait, I'm going to show you. Hold on. Where's the fucking replay? Here we go. I'll go to this. So you're looking at market, you're here. I personally go for kind of 618, 786 fibs. Let's have a look. Drag it here, up to the top. And where are we? Oh, excuse me. So I really prefer the kind of the 786, 618 fibs, right, where it comes around. So the two areas here, these are 382. It could actually hit there as well. I just don't normally trade it. And then, of course, you've got the lower. So you could mark up three areas here, right? Where are we? So you could mark up this small blue candle here. That would be the best. That would be fucking absolutely amazing if it came back there because it's better, better value, right? Value is very important. You can mark up number 2, drag it across. And if you wanted to, you could mark up number 3 here, but I wouldn't, all right? And what happens is, this is in a daily time frame, by the way. So now you just let it play out. So to answer your question, how do I get over, over trading? How do I not chase it up here, not chase it down here, not chase it, all this fucking bullshit? Is whatever the market does outside of this box or outside of this box, I do not give a shit what the market does. I just leave it. So I don't get trapped with FOMO. I don't try and chase this. Oh, it's going to fly. I just wait. I'm just ignoring this whole time. I'm not sitting saying to myself, oh God, I've missed it. You know, you could mark up this as well if you wish. Oh, sorry, hold on. You could also, just to show you, just so I can show you this, you could mark up this as well if you wished, you know, and you could mark up this as well. And just so you can see the whole picture right now. This one here, I probably wouldn't trade it because it's not too much of a pullback for me. I probably wouldn't trade this either. But this is also the 200 EMA, blah, blah, blah. Right, so let's see it playing out. I can't even remember where it goes to be honest, but that's how I would mark it out anyway, so it doesn't matter. I'm literally waiting now. There we go. Waiting. And now you could look to enter because you have your confirmation, right? There you go. And that's it. So the only time I give a shit about what the market does is at this box here. Or if it broke through, it would be this box here. If it broke through again, this box here, right? Apart from it, this one I just marked up just so I could show you. But I personally would not trade it because it's only the 38 fib. And I only really take the 618 or the 786. I don't touch the 50. I don't touch the 38. I just don't do it. And that's pretty much it, lads. So the answer to your question, how do I avoid FOMO? How do I avoid, chasing the market up here, chasing it back down, trying to, in, out, fucking shake it all about, is I create my boxes. There are reasons why I do these boxes. And whatever the market does outside of fear, I do not give a shit. I do not touch it. And that's how I avoid overtrading. I haven't just randomly put these boxes in. There are reasons why this box is here that I share, obviously, in the Discord and go over it in great detail. But yeah, I'm not just putting them on randomly. I know people like to go like this, and they'll fucking do stupid shit like, oh, when the market breaks through my fucking imaginary line, I'm gonna trade it. It's fucking stupid. You have to ask yourself, guys, right? If you're a banker, right, and you've got a $5 billion account and you're just about to place a trade worth 3, 4, 500 million, are you going to drop $300 million into this trade for a sell just because it broke a stupid fucking line that you painted on your page? The answer is no, of course you wouldn't, because you're not a fucking maniac. So of course you wouldn't. So if you wouldn't do that with a $300 million trade, why would you do it with a $1,000 account? You just wouldn't do it, guys. Gold, sorry, mate, I'm fucking rambling on. Wait till I have a look at gold. Well, gold is good. But look, we're in this weird situation right now, right? Where, of course, gold is just fucking buys. You would never sell gold in a million years, right? I mean, look, to give you context, of course, if you're a scalp trader or whatever, of course you would, that's part of it, that's fine. But I'm talking about for my method, right? Swing trade and longer trades. One, you couldn't sell it right now. You couldn't fucking sell it because it's just constantly going up, all-time highs. And retail traders get caught out because it'll be an all-time high right now, and they're like, oh, it's an all-time high. It's obviously going to melt, and it doesn't. That's not how markets work, They work on fucking supply and demand, greed and fear. That's how they work, especially with things like gold and fundamental economic data. So to say, oh, it's going to melt, why? Because it's an all-time high. It's just fucking stupid, and that's why retail traders lose all their money. At the same time, so one, I wouldn't sell it right now, right? So I've got two options, right? I can either buy it or I can do nothing. That's it. You're either going to buy it or you're going to do nothing. Or if it's if it's a different pair and you're looking for sales, you're either going to sell it or you're going to do nothing, right? So for me, gold, I can't sell gold because the whole fucking planet is making it go up right now. So I would be a maniac if I sold gold, right? I'm not talking about scalp trades. You want to scalp it in a 30-minute chart, whatever, you crack on. I'm talking about in general for the real long-term movement, right? So I can't sell it because it's constantly going up. So sales are out the window. Now, I also can't buy it because it's way overvalued. Way fucking overvalued. So I obviously can't buy it. So I either buy it or I do nothing. So right now I have to do nothing, right? It has to come back down to areas of value. Areas of value are so important. Let's have a look on the weekly time frame. Right, hold on. I'm going to show you this. Aye. Give me 1 second. Okay. I'll turn it around. Hold on. On gold, if you were going to sell it, that would be, I'd have to wait and see this, breaking down, retest, reject, enter here, and away it goes, if you're going to sell it, right? Obviously, you really want to buy it. So if I was to buy it, the only places that I would enter the market is here when it rejects or here. That's it. Areas of value. To determine areas of value, you would use the Fibonacci. I've just been doing it for so long now, I don't need to use the Fib. I know that I can tell you right now, this is probably 618. This is probably 786 right here, and this is obviously the 100 rate. Let's fucking try it out. So here's 786 right here. And yeah, there it is. Look, 618, 786. It's only because I've just been doing it for so long, guys, but just my fucking eyes know where it is. But this is the main one for me. There could be another box in here, right? I just don't want to fill my screen with junk. And I always like it when it comes to the 786. So that's really what I'd be aiming for. I would be buying it. If I was selling it, right, I'd be waiting for it to break down, come back up, retest this zone here, reject on a daily candle, then I would take it down, right? I would be up for doing that. And when it gets to here, what I would do is I would close 80% of the position. I would leave 20% of it open so that if it just fucking melts down here, because back up retest, I would enter another position here and take it down, right? I'll show you, because a picture paints 1,000 words. So yeah, if it ends up, bouncing around, boom, 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 break, retest, go, then that's it. So I'd enter a position here, take it down, close 80% of the trade, leave 20% as a runner, move my stop loss to break even or in profit, and then as it broke, I would ignore. I would not be taking that trade. Some people take it as it breaks. I do not. Wait for the retest, reject, in you go, and away it goes. A very, very powerful strategy, and I'll show you in a second. Honestly, it fucking happens all the time. When you have a previous support, right, which is then broken, that support then becomes the new resistance. And you'll see it time and time again. It actually happened the other week on oil. And I explained this to the guys. When I go to the lower time frame so you can make it out clearer. Look, support. Once that support is broken, it becomes the new resistance melt. It happens all the fucking time, guys. I'm telling you. It's one of those things. Is that Will Farrell? 80% of the time, it happens every time. It's a fucking amazing strategy. Do you know, right? If you couldn't be bothered learning fundamentals and you couldn't be bothered looking into data and spending an hour every Sunday writing down your trades and blah, blah, blah. See if you just looked for that setup, right? You looked for supports in the higher time frames, maybe the 4 hour or daily time frames, right? You just looked for support, waited for it to break, comes back up, and that then becomes the new resistance, and it fucking melts. And then obviously you can do it the other way, where you're looking for resistance. Once that's broken, wait for the retest, because that resistance becomes the new support. It will reject and it will fly. Honest to God, if you just done that one fucking strategy, right? You didn't bother your ass. I can't be bothered learning fundamentals, micro, macros, blah, blah, blah. If you just done that one strategy, you'd make a fuck ton of money. Honest to God, you will have losing trades because sometimes it will go against you. That's normal, right? But you will make a lot of fucking money on that strategy. I swear to God. It happens time and time again. I mean, I could show you it right here. I don't even think, has anyone even joined the bloody... Nah, I don't even think anyone's joined the live. Let's have a look at other pairs. I'll show you. Done it again. Go... where is... Here we go. Look, and I'll show you. Where is this one? Look, wait, I turn this around. Yeah, that's it, mate. Honestly, retests are fucking amazing. It's probably one of my favourite setups. Wait, I'll turn this around and show you. So look, you can see how fucking mega this area is, right? If you were to drag this across, right? And you were to drag it to the bottom. Look, support, Support, once the support is broken, it becomes, sorry, I'm talking shit. Resistance, once the resistance is broken, it becomes the new support, right? Support, boom, and away it goes. So look, there's two entries here, and I'll show you. It's the same entry time and time again, right? Look, if you look for small candle with a large white engulfing, and you mark up, I'm going to show you, hold on. And you mark up for your entry the blue candle, right? You mark up the blue candle. You then ignore, I ignore this. I don't trade this. Ignore. Wait for the retest. I mean, look, you're probably waiting weeks for this to happen, right? Wait for the retest. Comes around. Retest, reject. When this candle closes in your, that's the confirmation right there. This is the daily candle close engulfing. That's your entry. Retested the area. That's your entry. Away it goes. Now, I said to the guys, if you've missed this, because it was already up here when we got it, right? You don't want to be chasing the market up. If you've missed this entry, look, you mark up the small candle, large white engulfing, drag your block across. All you're doing at this point is wait, see if the market comes back and retest, because it might not. I mean, this could just keep flying, right? But if it comes back and retests this area here, which it's done, you could then enter this trade and away you go. And there's no rush. This, remember, this is the daily time frame, right? You've got 1, 2, 3, 4, 5, 6 days. You've got 6 days where you can enter this trade. So when people jump on the 30-minute time frame and they're like, fuck, I better hurry up and get it. You don't need to hurry up and get it. Look, 1, 2, 3, 4, 5, 6. These are all roughly the same price. Even if you entered here, look, you're still in drawdown here, right? You've got 6 days where you could enter this. One, that's your sign that you're potentially looking at a trade. That's your confirmation when it closes. Then you've got 1, 2, 3 days. You've got 3 days where you could enter this trade. You don't need to rush, guys. I'm telling you right now. And look, bang on that, and away it goes. Same again. Small blue comes in, retest, rejects, and goes. Now, at this point, I don't give a shit what the market does here. What I'm waiting for is it to come up, because you've got this resistance, right? I want to see it break clear, because it could still reject here. Look, it has not broken this resistance yet. So what I want to see it break above the resistance, come back down, retest this zone, enter, and away it goes. And obviously, if it breaks back down here, I would enter here. You see what I'm saying? But that's it. I promise you, see if you just waited for those entries, you're going to have losing trades. There's always losing trades, but you will have a very high probability, and you will make a fuck ton of money if you just follow it, right? Don't overtrade. People lose their money because they overtrade. I can sit here for 3-4 weeks and not touch a single fucking trade. And I have the added pressure because I'm trading a PAM account and other people's money's in it, right? Sometimes they'll text you, oh, mate, I can see there's no trades. Yeah, there's no fucking trades. Because the thing is, the microphone, sorry. Well, not, you have to think about what's the goal here, what's the aim, right? We're not here to trade. We're here to make money. If a trade presents itself where we can make money, I'll take it. But if I'm sitting here and markets are like this, look, how the fuck are you going to trade that? There's nothing to trade there. You need to wait. See it? Look, you need to wait for this to come back down. You need to wait for this. Retest, reject, boom, boom, boom. That's what you're waiting for. You're either going to enter here, or you're going to enter here. That's what you're waiting for. So I can't trade it until it does that. You know what I mean? And like I always say to the guys in our Discord, we're not here to trade, lads. We're here to fucking make money, right? Many people get that mixed up in the trading world. We always feel that you need to be in trades every single day, and that's not the case at all. If I come on the charts and there's 8 trades that can be taken, I will fucking take 8 trades. But likewise, if I come on the charts and there is no trades for 8 weeks, I will not take a trade for 8 weeks. And that's where people with this kind of delusional mindset of, I'm going to make fuck tons of money from trading, I don't need to work, blah, blah, blah. It's not very realistic unless you've been doing it for years and you have a fuck ton of money where you don't need to make money every month, right? Because you've already got enough banked that will see you through, right? Because you can have bad months where the markets are just absolutely wank and there's nothing you can do about it. You don't want to be in a position where you're relying that you have to make money from trading. because that's not, I can guarantee you, it's not going to be the case. And the people that are telling you, oh yeah, you can fucking trade every day, these are a bunch of cunts. And they're probably doing that because they just want your money. They probably have a deal with the broker, and they will get paid when you use the platform, whether you're winning trades or losing trades, they'll get paid. They're just shysters. So don't listen to those cunts. Yeah, there's not much to trade right now. Euro NZD. Well, look, I'll show you. Euro NZD is looking fairly decent, right? Yeah. So potentially you could buy it from here. However, this is when Euro was strong. So Euro was strong previously, which is buys, and you'd be like, oh, why is it buys? You know, how if NZD is much weaker, the economy is much weaker. Well, look, that's clearly a sell. That's clearly a sell. Yes, but there's no value in Euro above that. There's no value in NZD below it, and so on and so forth, right? Areas of value are very, very important. I can't stress that enough. So this right now, yes, it's in an area of value to buy from, right? However, fundamentally, the Eurozone is not as strong as what it previously was, and I'll show you. Right there. I'll show you what I mean, because I believe a picture paints 1,000 words. I'll just go to last week because the numbers were shit. Okay, look at that. Right, it's not just because they're red. Red doesn't necessarily mean bad. But yeah, look, totally shit. This now, where people get mixed up, see that says 51.2 and that says 50.6. People that don't know what they're talking about will look at that, right? And they'll say, oh, that's weak because it's dropping. It's not weak. If it's above 50, that means bullish, right? Even if it goes to 50.0, that is still bullish. Only when it gets to 49.9 and below, it then means bearish, right? Sometimes let's just say, look, if this is 52.9 previously and it drops to 50.5, that does not mean bearish. That is still bullish, guys. It just means things are slowing down. So then for the next month, what you can anticipate or forecast to happen is it's probably going to be, 49 or 48 and getting worse, which is exactly what we'd expect to see in the Eurozone now, because look, it's all fucking melting. That's bearish, bearish, bullish, bearish, bullish, bearish, so the Eurozone is just absolutely fucking tanking right now. And I'll then show you what that means in terms of Euro NZD. So sorry, I'm going to flip this around again so I can show you this. So look, even though you could say in terms of value, yes, this is a fantastic area to buy from. Yes, it is. However, I would be cautious and I would not be jumping into buys when it gets here. You've got a flip zone right here. So let me just show you. So what is it we just explained a second ago? When you have an area of support and the support is broken, what happens? It becomes an area of resistance. The old support, once broken, becomes the new resistance. The old resistance, once broken, becomes the new support. So what you'd probably see here, I'll just get rid of this. This was for an older lesson that I've done. What you'll probably see here is, and because of fundamental data as well, boom, boom, bang, it'll bounce around, creating liquidity. It'll make people enter buys because they'll be like, look, you're gonna fucking buy it from here. And then it'll just go like this, melt, right? I'm gonna move that across. So what I'd then be looking for is, I would not be trading this. I wouldn't be taking it. So here, I would not be taking sells. Why? Because it's not in an area to sell from here. It's in an area to buy from in terms of value, right? It's very important to understand that. But fundamentally, you wouldn't buy it because the Eurozone is fucking melting and it's getting weaker. USD is starting to, it's not melting yet, but it is starting to get worse, right? They're starting to do rate cuts and so on. The whole Eurozone, pound, USD, they're all starting to do rate cuts, which is showing weakness. Now, even although the New Zealand economy is shit, what happens is when we move from risk on where everyone invests in USD, Euro, Pound. We then move to risk off, right? When markets start crashing, we move to risk off. That means people don't want to be putting their money in the USD, Pound, Euro, blah, blah, blah. So what do they then do? They then put their money into risk off assets, currencies. So they can do gold, silver, NZD, Japanese yen, Swiss franc. These are risk off assets and currencies, right? So they'll move their money from the USD into, from the euro, etc., into NZD. So even though the New Zealand economy is dog shit, we're now changing sentiment from a risk on sentiment to a risk off sentiment, right? So you could sell from here if you wish, but I wouldn't. What I'd be waiting for the top trade, hold on, I'm going to get rid of this and I'll show you again. What I'd really be looking for is I would not be buying from here because it's probably going to come down. Everyone's going to be entering buys here, thinking, oh, it's going to fly back up to here. And what it'll do is you can record this, lads. You can fucking take a screenshot right now and I'll come back again in 2 weeks. And then what it'll do is it'll fucking melt. At this point, I'm still ignoring the market. I'm not entering sells, right? Previous support, once broken, now becomes the new resistance. What's going to happen is it'll come up. It'll retest the zone and it'll melt. That, out of all of this, that's your entry for sales. That is it. And if it ends up being buys, all you're doing is waiting. Boom, retest, bang, bang, break to the high. It'll come back down. It'll retest this zone here, and then it'll go, right? So you still haven't missed it. I'm going to change it to green. 1 second. Hold on. It's annoying. Why the hell is that? Okay, 2 seconds. There we go. That's your entry, you know. So that's it. So out of all that mess, you're only caring about 2 entries. You don't have to get caught up in over trading and over risking. That's your entry right there, or that's your entry right there. That is it. Anything else the market does outside of that, we do not give a flying fuck, right? We don't touch it. And that's it, guys. A lot of people make trading much harder than it needs to be. Of course, this is the technical analysis side, right? We would determine if we're going to be entering buys or sells based on what's happening in the fucking world, right? And obviously what the banks are doing, right? These are very, very important things. But yeah, that is pretty much it. Look at oil. I mean, oil was a fucking... I gave this trade the other day. Boom, this was a different lesson. That's if it breaks up high, you could enter here and you can enter here. Oil, so it's in this weird place, right? Oil is 1,000,000% buys. You just wouldn't be selling it now, right? However, look, previous support is broken. It becomes the new resistance. You get an easy trade there, easy money. It's not quite a swing trade that I would take, but it's very fucking easy money. It's just, you know, it's going to happen. What I'm really waiting for here, look, the markets won't just come to here without retesting this zone. I'm telling you right now, all retail traders have got their stop losses down here. So what does that mean in terms of banking and trading? It means that's where the liquidity is, right? Before banks take off, they need to generate liquidity. They cannot enter buy orders until they have enough liquidity, until there's enough orders open, free in the market, if you like, right? So market makers and banks, they don't know where your stop losses are. I know people say, oh, they can see your stop losses and they hit you. No, they can't. However, they just know where retail traders place their stop losses, because every fucking trading book that you buy and read tells you what? It tells you to put your stop loss, 2 to 5 pips below the previous low. So they know that somewhere in this fucking area here is millions of liquidity, because you've all read the same books. It's usually the same books that these guys have written. So they know you're going to put it there because they've told you to put it there by selling you a book that they've made. You know what I mean? It makes fucking sense, right? So they're going to put it there. So as I always say, where you think you're going to enter the market, whenever I look at a trade, right, I look at all this stuff and I say, right, could you enter here for a buy? Yeah, you could. You can do whatever you like, but I wouldn't, personally, I wouldn't fucking enter a buy now at all. And then look, if it comes down, retest here, you could enter a buy. However, what I say to myself is, where where are the retail traders putting the stop loss? And the answer is around about here, right? Because you know they're putting it just below the previous lows. So I'm waiting for the market to come back down here. And where everybody has got their stop losses, that's where I'm going to enter the market, right? You just need to wait. And then when I've entered here, I'm going to put my stop loss down here. So you're in at a fantastic price, plus you're way below all the liquidity. So you're giving the banks a reason, the institutions, not to come down and hit your stop loss out, hit your order out. Why? Because if they come down to these levels here, they've just released all the liquidity that was previously trapped here. And they don't want that. You know, that, not talking about this area, I'm talking about down here. They don't want that because they're giving everyone who got in the wrong trade is like, oh, if I get back to break even, I'm going to close my trade. They don't want to do that. So they'll come down, they'll hit the stops like this, like they'll hit the stops, boom. They'll hit the stops again, look, boom. They'll hit the stops again, bang. They'll give it a whip back, and away it goes. That's all you're waiting for. That is it. So whenever you go to place a trade, always think to yourself, before you place it, where am I going to put my stop loss? And then when you say, right, I'm going to place my stop loss there, just stop. Don't place the trade, right? Just before you place it, just say, fuck, you know what? I'm not going to place it anymore. I'm going to wait. And where I plan to put my stop loss at this area here, I'm going to wait for the market to come back there. And instead of that being my stop loss to take me out of the game, I'm going to make that my entry to enter the trade. And I promise you, you're not going to get 100% strike rate on that. There's no such thing as 100% strike rate in trading, right? No, people are bullshitting if they say, oh, I never have a loss. They're talking shit. However, you will notice, you'll be like, fuck me. How many times does the market come back to where I would have had my stop loss? It's fucking loads of times. And it's not because they can see your stops. It's not because they're chasing your $50 fucking stop loss. It's because these guys write the books that you all read and they tell you where to put your fucking stop loss. The reason why they tell you to put the stop loss there is because you are their liquidity. They need you to be going against them so they can hit your stops. It releases all the orders for them. They get that liquidity and they push the market in the direction that they see fit. That's how it works. So they can't see your stop loss. They just know that you're going to put it there because they wrote a fucking book and they sold it to tell you where to put your stop loss. That's it, lads. All right. So next time, yeah, you're welcome, mate. So next time you go into a trade, don't enter it. Look at where you're going to put your stop loss and make that stop loss area your entry. All right, guys. I think that's pretty much us for today. Fucking hell, how long have we been on here? I don't even know. But that is it, guys. Don't feel that you need to trade. Mark up your areas. Whatever the market does outside of that area, just ignore it. That's how you deal with getting over FOMO. That's how you deal with not chasing the fucking market up and down and blah, blah, blah. Look, I'll just show you one more time. Look, I only care when the market gets down to this box. I care when the market breaks this and comes back up. And I care when the market comes to here. Anything outside of those blue boxes, I do not care what the market does. All right, guys. And that is the best way for you to not overtrade, for you to not FOMO and blah, blah, blah. All right, guys. That's pretty much us for tonight. I'm going to do another live on YouTube on Wednesday. So if you want to jump on, jump on. It's better if you jump on the YouTube because then you can see my whole screen and I can just talk to you. I don't think anyone, when I'll check, I don't think anyone has actually jumped on the live. Your screen is far too wide and narrow to see properly. Please change the resolution to the standard. What? Who are you talking to? Oh, it's because my screen is too big. Your screen is far too wide and narrow to see properly. Please change resolution to the standard 1920. Well, how do I change that? It's one thing telling me to change it and then not telling me how to change it, isn't it? Where is it? Well, that's pretty much it, lads. I shall see you Wednesday night. Hopefully by Wednesday, I can work out how to use fucking hell, an hour and 9 minutes. Hopefully after that, I can work out how to use it properly because it's potentially a good tool, but it just never seems to work properly when I do lives. I don't know if it is because my screen is huge, but I don't know. But yeah, I would like to give some freebies, free info on YouTube. So have a great week, guys. Take care. You have a good evening too, mate. All the best. What is happening here? Right, sharing. Where does it say about that?